Let's also welcome Gurmeet Chadha in the conversation. Gurmeet, afternoon. Have you started buying already, or you're waiting another 2-3 days, but already initial calls to clients have been made?
I think these days the clients call you, Ajay. I think that's how the evolved
You have
market
started
is.
receiving calls since morning?
Yeah, actually, since yesterday, because I think the developments really started Friday night. But yeah, we have deployed about 25-30% of the cash we had in the portfolio, plus depending upon how much fresh money comes in. Uh, my thesis, we don't know in future. Nobody knows what future is. But your past experience tells you that whenever India falls for non-India reasons, in hindsight, that has always been an opportunity. Although this is hardly a correction, falling 4-5% from peak is not a correction, and we haven't seen 10% correction for a long time this year. So I think market was looking for reason. I think we've got two or three right.
Kya baat hai? What a point. Whenever India has fallen for non-India reasons, the falls have been shallow, and you've already started receiving calls from your clients. That's interesting. So where do you see there's a shift of stance? A lot of people are saying domestic-oriented capital goods manufacturing is where the money will move out from. It may go towards consumer names which haven't done. Are you also making some similar tilt?
I think you need to have a balanced approach. This is not this versus that. I personally think it's just 1-2 day fall. I think Fed will do some emergency measures. That's my reading. We could see a rate cut much before than what market thought it probably will be September. So broadly, the bond yields have fallen. I think there will be some softening of bond yields, which I think is very positive for the market, especially financials and rate sensitives. So that's one focus area, and that's one segment which has relatively underperformed. FMCG, because of rural recovery and because of delinkage with the global market, some of the FMCG names are still, that's why you need a very balanced portfolio. Today, if you had FMCG and pharma, your fall would have been much lesser. So it's also important to fall lesser. We sometimes in the bull market we get carried away only by returns, but having a risk-adjusted approach with falling less is also equally important. So I think we'll continue to dip more into especially rural-facing names like ITC, like Imami, like Tata Consumers of the world. I also want to look at some defense names if we get sharp corrections. Unfortunately, we are in a geopolitical environment where I think this will be more, we'll see these more and more often. We've recently seen some news now on Bangladesh coming with so much of internal civil war kind of a situation. I think the Bangladeshi PM has resigned. So I think this is a new truth we have to, reconcile with. Second is any supply chain disruption. I think where India has an edge, like auto ancillary, especially for the IC engine parts, we'll be very, very focused on.
Point taken. So looking out for those hidden gems. But wanted to shift focus away from the secondary market, Gurmeet, and talk about the primary market because a lot of action there, right from Ola to First Cry to Unicommerce. Have you looked at any of these companies and would you recommend subscribe?
We had a look, at the RHP in detail. So if you see, businesses like, EV, obviously it's a pure play. I think the operating leverage will come when they do, 5-6 times of the volumes they are doing right now. What is important here is how much can the local EV ecosystem be developed, right? So if you look at China, for example, the Colt supplies battery. Not only it's the largest battery maker in the world, even Tesla buys CAD battery in China, right? Today, GM has also entered. So how much can we localize the EV ecosystem? I think is what will decide how this will do. They have some plans on, the cell factory they have, increasing it to, certain gigawatts. I think they're at 5. They probably will take it about 15, 20. And I feel that the traditional guys have more cash flows and war chest to fight this, because if you see number of two-wheelers sold in India, it's about 1.2 crore. The number of electric vehicle is not it's still in single digits, not even cross double digit. So adoption in India has been relatively slower in my view. So I would be neutral right now, like we were in Zomato. I'm not comparing the two. Once Zomato really started showing cash flows, when Blinkit came in, contribution margin went in, that's when we decided to enter, and we have still made very good returns on that. I think something similar we'll have on Ola. We have a neutral outlook right now, and these businesses you need different lens. You can't evaluate them on PE and traditional metric basis. So we'll wait. And I'm focusing more on the EV ecosystem, including battery swapping, including cell factory. How much can it be localized for us to take a more decisive call?
Okay, so that's the view coming in on Ola and a couple of other primary market participants right now. In terms of the market, it's Motherson Sumi Wiring, which is down 10%. LIC Housing that disappointed with the earnings, even though the management has gone ahead and stuck their neck out with respect to the guidance, because they're maintaining that despite the miss coming in Q1. This is LIC. I'm talking about LIC Housing Finance, because that's the stock which is down 8 to 9% right now. I did see a bit of a recovery from the lows because the management went ahead and maintained the guidance. Thermax is down 8%. CAMS is the other candidate. We did speak with the management earlier in the day about CAMS as well. They were positive about the outlook. Adani Transmission is surprisingly down 8%. Don't know if there is going to be any impact on the transmission business, but maybe they do have some, foreign denominated, debt, etc., which might be putting a bit of a pressure on some of those names as well. Vinay, wanted your take regarding some of these Adani group of companies. Is there any chart that you would like to look at positively?
Yeah, so as you discussed, Adani Energy Solutions. So till yesterday it was looking good, but today somehow it has come down by 8%. The another stock is Adani Wilmar Limited, which is holding very well in today's session. So these stocks happens to be very volatile stocks, and in this kind of markets when volatility and VIX is rising and sentiments are turning weak. So this kind of volatility would be there. I think despite they are showing strength on the chart, still the overall setup of the Adani Group stocks are relatively stronger. But I would suggest not to touch that, because these kind of moments, till yesterday, as I said, Adani Energy Solution was looking good technically, today it is down. So it might happen because overall support from the market is not there. So I would not suggest unless until we get some clarity on the market. And as of now, the market trend has turned weak. So better not to touch those stocks as of now. Definitely, Adani Wilmar is looking stronger on the charts, but I would rather not take a long position in the weak market.
Let's talk about on the downside, the short position, especially the view is coming that metals could actually see a major down cycle because of globally connected. Anything which looks weak there, the index is already down 5%, but anything which looks weak there, Vinay?
Yeah, so Tata Steel is one of the stock which has broken down below the strong support, which is nothing but the 200 days exponential moving average. But in last three sessions, Tata Steel has witnessed a heavy correction. So it might happen that you may get it at higher level. So at higher level, Tata Steel can be looked at for the shorting purpose. So from the recent high of 169, it has come down to 150. So around 155 odd level, one can again get the selling opportunities. Overall, I feel Tata Steel is looking weak. Derivative data also suggesting that Tata Steel witnessed some short build-up in the last week. So overall pattern of the Tata Steel is weak. If it comes down, comes up by 2-3%, around 155, one can look for the shorting opportunities.
That's a view coming in on some of the metal counters. QSR also as a space showed signs of reversal. Would you just buy right now, Gurmeet, or wait for some more time there?
No, I think it's a very interesting theme, and I had this discussion with Ajay, some time back. You have a Haldiram at 80,000 crore market cap, and you have all listed QSRs less than Haldiram. I think it's 65,000 crore. In fact, I don't think so we have a single large cap in that space. A little bit of bottoming has happened. It's been tough 2 quarters for most of these guys, including Westlife. Jubilant has gone through a lot of attrition, a lot of changes, a lot of so I think at there's an inflection point beyond which, the earnings start showing stability and growth. In our basket, you have Mrs. Bector, which is technically not QSR. It is interlinked with the entire supply chain of QSR, one of the suppliers to Westlife and a lot of key brands. And we have Westlife in our portfolio. We are looking at Jubilant in case, valuations become a little more reasonable from these levels. But in general, I think our cooking time as a nation has come down 25%. With nuclear families, I think QSR should do well in my.
When you can spend time in your drawing room, in front of OTT, your favorite OTT, right? Okay, so let's talk about some other areas. I was also looking at the number of residential outlets in our country now reaching a fitments, kind of time zone has also gone up significantly. And someone was telling me, a large builder was telling me that, there are entire blocks of, residential societies which are witnessing work of tiling and, last mile kind of work. Would you look into some of these last mile names, Gurmeet? people who are providing boards or even piping or even tiles?
I think it will take probably a quarter or two, because in the first period you saw existing inventory being sold, which was post-COVID. And we had a series of launches in last 2 years, very successful ones from leading. I think what we are seeing in, especially in Bombay and Delhi, in that region, because real estate, you have to go geography-wise, is that corporatization of real estate developers. If you see the top five developers in every zone are largely large corporates, listed players. So in Delhi NCR, the local builders, regional builders have made way to the DLF.
Got Gurmeet on a bit of a patchy line. Gurmeet, in fact, we let you go on that note. Sorry for interjecting. There seems to be some technical issues there. But we do have Amit Mahajan, Director at Paras Defence and Space, joining us on the show right now. Amit, hi. Thanks so much for making time and speaking with us. A good show right now that I'm seeing in terms of your numbers. Revenue up 73%, profitability more than doubled on a year-on-year basis. Is this the kind of run rate that we should expect every year? Because till last year, the revenue growth used to be 10 to 20%. What really changed that you are seeing a growth rate of 73% this quarter?
See, firstly, thank you for having me on the show. It's always a pleasure talking to you guys. The company has been making a transition from a component-based company to a product-centric company. Some of the high-value products that we've been trying to develop were to be slated for delivery last year, and I've been mentioning that they will come, and the time has come. Maybe this will eventually get consolidated. Yes. Now the business and the revenues, also the profitability is likely to streamline. So yes, you can expect a fairly good financial year.
Just to understand now that, I'm looking at your numbers last 2-3 years, the run rate. Now is it right to assume that now you're going towards more of a 400 crore kind of a top line, kind of a company on an annual basis with 30% margins?
You can say that around that figure, yes.
Okay, great. Because that is important, because up till now, one section of the market, though yours is a very admired company, one section of the market thought that it's slightly on the expensive side, looking at your previous year's numbers. But now with 84 crore top line and a 30% market, 10 times sales, 11 times sales. Tell us how next 2-3 years is this transition going to continue momentum? What are they going to be a mix like, the revenue mix?
I will take you back to the first sentence that you said, that sometimes this company was slated to be costly, but this is how defense and space sector is. It is wait and watch. When it comes really good. So the company has always been in this business, has always learned that if you invest time in the development, then the returns in this particular sector or the industry of defense and space are usually very, very handsome. And to our benefit, most of those returns are permanent basis. They are not one-time returns. Because if you develop certain technology and if it's going to go for production, you're a part of the whole cycle at all times, unless you say no to your business, which nobody does. Now, coming back to your question as to in the next couple of years, see, there are the geopolitical situations, the new reforms in defense procurement. All of this are favoring companies like Paras Defense, who are indigenous manufacturers of these technologies. Now, we have been currently also been a part of a lot of development of critical technologies. Now, this allows us to become a part of a program and add more and more value year on year basis. I would want to translate the same thing into my order book and subsequently my revenues. I would give you a very, very conservative guidance of about 25 to 30% year on year, but that should continue.
Thanks, Amit, for making time and speaking with us. So that's Paras Defense. It's actually shot up in an otherwise weak market because the stock was trading at a lower circuit. But since the numbers have been out, we have seen a bit of a reversal. And that's been the nature of the market today as well. Because while the global indices were much under pressure, the Indian markets have been outperforming. And to talk to us about a bit more on that, we do have Aisha and Nikunj on the wall. Aisha, take it away.
Oh yeah, absolutely. Even though we've seen that 7/10 of a recovery coming in for the Nifty, I don't think it can qualify for the kind of buying that you had from either the election outcome day or for that matter the budget day. It's nowhere close to that. It's been a global rout and there is no way of sugarcoating it, right?
So, Aisha, what are the basic questions you go to ask now? Are we likely to fall less or are we likely to fall in line with global markets? If it is a global sell-off, is it just the beginning of a directional trend or this is more like a technical sell-off, garden variety sell-off, 2-3 days it will be over? And third, typically when this kind of a shakeout happens, it leads to sectoral churn. So will there be a sectoral churn? There is something which I've learned in financial markets, it's called recency bias, which is that you look at the recent past and say this is the future, which is the last 2 times markets have corrected on election budget day. If you bought the fall, you benefited. Should you buy the fall? The difference is yes and no both.
But those were local events, right? This is a global rout which is underway, and the screen clearly is highlighting the reasons why. Clearly, after the jobs data in the US, there have been recessionary concerns, although it seems that there is an emergency Fed meet, so who knows? Maybe it's going to be an out-of-policy rate cut that we may have in the offing, and then, of course, what emerging markets do is anyone's guess. From there, traditionally, they typically move up whenever the Fed does ease off on rates, and considering this has been such a much awaited event, you never know at that. And also the yen carry trade unwinding, we've seen the kind of fall that the Japanese markets have had almost in a bear territory already. And then of course, one can't negate really what's going on with regards to the geopolitical tensions all across West Asia, and as close as not geopolitical tensions but unrest definitely in our close neighborhood as well. So the texture of the fall today is very, very different than what a budget or an election day was.
It's global in nature, but globally, is it because of an event or is it because of the Humpty Dumpty leverage trades are reversing? I think it's the latter which is at play, because I don't think geopolitical tensions are new, or for that matter, US economic conditions are new. These are all, markets are reacting to yesterday's story, not tomorrow's fact. So that makes me hopeful that there's a technical sell-off. But where I see both opportunity and threat is the selling in commodities. In the near term, great news, because commodity goes down, margin expansion happens. In the near term, commodity goes down, crude and other things, other commodities will come down, you would benefit. So in the short term, India is a commodity producer, consumer, not a producer. So you would benefit and inflation comes down decisively. If this becomes a trend, then it's a problem. So that gives me a little bit of hope. Third, believe it or not, 20,000 crore to hai. The 20,000 crore is still going to come on a monthly basis, and that I think is the ammunition on which this market is working. And fourth is that you are still in the best macro spot. Earnings, currency, fiscal deficit, government commitment. So those factors in a sense will not Teflon coat you, but they will give you a backstop sooner than later.
Yeah, but I think the question on everyone's mind would be whether to buy the fall just yet or not. Of course, there would be a couple of trading buys. I mean, what explains the fact that some of the IT stocks, some of the pharma stocks, FMCG names, and even PSUs, and I'm not only talking about PSBs, some of the core PSU names which were considered to be frothy, even they actually have seen a mighty recovery from the session lows. But again, those could be trading moves. Do you go all in right now if you were sitting on cash? I guess is the question that all of us have to answer.
So anything which has got to do with global, even IT, just avoid them, because if it's a global problem, you don't know where the chain of, what the snowball effect would be. But like I said, that where can I pick a bright spot, where dim light could become bright light? Like they say, focus on where the puck could move, not where the puck has moved. The dim light is in the agrarian sector. Good monsoons, hopefully a bright light now. The dim light is in FMCG sector because of rural demand and because of high compression in margins. Commodities come down, that becomes a better light for me. And then if markets are indeed in a mood of unwinding, then this becomes the defensive space, not because of the nature of the businesses, because they've underperformed for many years now. So where you actually may see a space to avoid is PSUs. They're Humpty Dumpty, they're bloated. I think for many PSUs, multi-year trends and multi-year tops have been made, so you want to avoid them. FMCG, time-wise correction, price-wise correction, both is at play, and whether it's Colgate or Britannia, they are getting back on the trajectory. So FMCG, yes, especially urban, rural FMCG. Autos, look at local guys. Look at a Maruti instead of Tata Motors. Don't look at Bajaj Auto, which is exports. Look at Hero MotoCorp. Look at, don't look at Motherson Sumi, but look at any auto ancillary company like Tire, which is making local stuff. That's another sector you need to look at. IT, I'm not so sure. Banks, FI selling, that's a problem. Or bacha kya? Yeah, pretty much.
Yeah, that's pretty much it. So, that's the texture, and that really is the messaging, Anisha, for the retail community on whether to buy the fall, what to buy, and if to buy at all or not.
Yeah, that's $1 million question. Do you deploy right now? Do you wait for a bigger correction? But seems like the consensus is perhaps you should start deploying in a staggered manner. But where do you deploy is the big question that you need to answer, looking at the risk and the reward profile that you would like. But just looking at the market texture right now, how are we likely to close? Where we're likely to close off the lowest point of the trading session. But don't, kind of take your eyes away from what's happening across the globe, because the European markets have taken quite a bit of plunge right now. You do have the DAX down 2.5%. French CAC has taken a deeper cut as well, and the pre-market rates in the US have kind of tumbled a bit more. So from 6% cut on Nasdaq, we had reversed to 4%. Now we are down 4.5%. So we're just toying with that cut of anywhere between 4 to 5% when the market does open in the US. So that remains a bit of a worry point right now. Oil has cooled off quite substantially, to be honest, because of the US recession fear. So oil is down to $75 per barrel. Gold continues to hover close to the life high levels. Indian rupee, of course, has weakened and we were headed towards that 84 mark. So lots ready to track on the markets right now. But what about the BTSC trade, if at all any, that needs to be watched out for? Kunal, any BTSC trade that you would want to take home?
Yeah, I think a couple of high-risk trades over here. The first one would be a buy on Philip Carbon. That's a chart which apparently in the last 4-5 days has done exceptionally well. So I think at 380-85 levels, the stock, I would probably anticipate a similar up move over the next couple of days. Buy with a target of 405. Stop loss could be kept at 370. And Jubilant Pharma is something which is looking attractive. The stock forming a pennant formation on the daily charts. So would suggest a target of 885. Stop loss at 815.
Okay, point taken. And if you thought that perhaps the global turmoil was limited to what's happening in West Asia, that's not the case. It seems to have reached the eastern shores close to India, and that's coming in from Bangladesh. Look at the flashes at the bottom of the screen. It has been confirmed by the Bangladesh army now that Sheikh Hasina, the Prime Minister, has resigned as the Prime Minister. There are reports doing around that she has fleet from the country, that is Bangladesh. So we'll have to track that developing story as well. Those are the visuals up for you on the screen of a helicopter perhaps that is said to be carrying the Bangladesh ex-Prime Minister now, Sheikh Hasina, because there has been a lot of civil tension as far as the Bangladesh is concerned, and now perhaps it's closer to an end with the Prime Minister fleeing the country at the moment. We are looking in for more details as to which country she's headed out to, because there's a lot of speculation around that. But yes, that's the latest that we are tracking. So a lot happening as far as the global geopolitical situation is concerned. Of course, from Iran and Iraq as well, we have been getting a lot of updates with respect to what's happening to the Western Asia kind of territory as well.
If you like this video, then like, share and subscribe to ET Now.